Motivation is what gets you started. Habit is what keeps you going. Jim Ryan. We see markets way down for the day when it comes to stocks, both the S&P 500 and the Nasdaq 100. S&P weighing in down at 2.35%, the Nasdaq over 3%, and gold down also strongly. We are excited. Why? Because we have a weekly vertical crossover going down on gold and one going down on the Qs. If you're like me and jumped into a practice trade on Friday with the Qs, I'm up about 15% right now on that one. And of course, many of you have already logged out of your gold trades with success. Congratulations. Again, and those of you who are staying in, congratulations there too. Remember, make sure that you have your profit and loss bands drawn. Hopefully you put in, when you put your practice trades in, you put in your good till canceled sell orders. So that's simple when it comes to getting out at least half your position, if not all of it, for the profit that you decided you made sense for you to seek in that trade. Now, those of you who want to know more about what we do, we've got great trainings for you available for free. The training today is cutting losses is the key to winning. I put that one in today, and I think it's apropos, even though everything is going our way, to remember that things don't always go your way and how important it is for you to make sure that you plan for both success and when things don't work out. If you're not doing both, then you're leaving out half of the equation. Because, my friends, losses are what kill you in the market. Profits are always easy. It's losses that you don't cut that destroy you. So you've got to have that discipline. And of course, love that quote for today. Motivation's what gets you started. Habit is what keeps you going 10 to 15 minutes a day. That's all we ask. Let's jump into these markets. S&P 500, like I said, down 2.35%. Look at that beautiful red down candle. Looks like we may have at the end of the week a weekly vertical crossover going down. We don't call it until that candle's drawn, and we won't know that until Friday afternoon around 3:50, which is potentially your buy-in point for your down practice trade. That would either be puts on the S&P 500 or a practice trade of purchases of something like SH, which is the short fund for the S&P 500. It's a single short. And again, want you to practice trade these before you ever think about spending real money. There are costs involved. These typically are rebalanced quite often, and they have high fees, so you need to experiment with them and see if it works for you. Also, if you've not taken our option training, it's available for our Patreon members. Options parts 1, 2, and 3, options made simple. Check that out. Now, let's go back to the S&P. We see everything setting up for a short position potentially there. Look at the 2-day chart heading down again right around the same bottoming on that prior 2-day down move. This is the first day of the latest 2-day candle. Look at that price percent oscillator spiking over, derivative oscillator heading down. We see where we had 2 days of sideways and upwards movement, and then boom, dumping over again. That is good to see. We want to see things moving in a consistent direction, either up or down, because with a little sophistication, of course, you can make money either way the market moves if you just practice and get that knowledge. At the end of today's video, I'm going to put in there for you inverse funds, how to make money when markets crash. It's about how you can use inverse funds with your practice trades to succeed. Now, let's keep moving through these charts. We're going to go to the weekly on the Nasdaq 100. Beautiful. We had that weekly vertical crossover last week. Things are moving in the right direction. Derivative oscillator gaining downward momentum. Look at that smooth downward descent in our price percent oscillator on the weekly. On the 2-day, we have forming a green spinning top. It's a solid green, so things are still moving down. Look at the price percent oscillator heading down at a deeper angle. The derivative oscillator still losing some downward momentum. Go to the half-day chart. That is from, of course, you can see about a day of up movement and then sort of the rolling over We'll see if in the morning we get a crossover going down on that half-day chart. That'd be nice to see and consistent with the kind of moves we want. We'll continue to watch, see what there is to see there and learn, but things going in the right direction on the cues. Now, let's go to 20-year bonds. Up for the day a little bit. The only thing up, 0.13%. Been tracking sideways, trying to move up on that weekly chart. Price percent oscillator still heading down just a little bit. Derivative oscillator negative, but losing downward momentum. Go to the 2-day chart, trying to cross over. Again, we've seen a lot of sideways sliding, trying to move up. And typically you would expect money to flee the markets going down into bonds. And we'll see how that continues. Maybe we'll have an opportunity to jump into an up trade on bonds. We've just got to see that weekly crossover going up. Hasn't happened yet. 2 days trying. That will precede, of course, the weekly unless they happen at the same time. And we look at the half-day chart. Just wouldn't cross over going down, bounced off in the morning and up in the afternoon on the price percent oscillator. Same with the derivative oscillator. Again, we can see that sideways slide underway on our Heikin Ashi candlesticks. Lastly, we go to gold, down for the day 2.16%. Hard to read in the light that I'm in, but look at that. We had the weekly vertical crossover 2 weeks ago, not quite 2 weeks ago, on the 11th of September. A difficult week last week as things tried to tick up, but then rolling over nicely, hitting lower lows. Look at that price percent oscillator hammering down, derivative oscillator gaining downward momentum. 2-day chart, same thing first day, just beautiful. Those of you who are in those short gold trades, I know you're happy. I know you are happy. And you should be having a very successful practice trade, if not already having closed it out, which again, let things ride. Again, plan your work and work your plan. Follow what it is you planned to do based on your past experience. Now, lastly, we'll go to the half-day chart. Look at that in the morning, down, further down in the afternoon, price percent oscillator hammering down, derivative oscillator just stepping down beautifully. That's where we are, folks, as we end the day. And again, if you don't have our book and want to learn what it is we do here, follow the link in your show notes. Charting Your Way to Wealth is the book. We appreciate all of our Patreon supporters. Don't forget, Patreon members, that first week in October, which is coming up sooner than you might imagine, we'll be having our live Q&A answer session. Going ahead and taking the stocks and ETFs you're interested in looking at and reviewing for your practice trading, and also your questions. Go ahead and start getting those in. It's going to be Wednesday the 7th of October, 12:30 Eastern Daylight Time. If you're not a Patreon supporter, go ahead and get signed up. Plus you get that free training that we offer only there, our 3-part series in Options Made Simple. You want to learn what options are about? We can help you with that. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.